Hey there! Americans alone currently owe over $1, 13 trillion in credit card debt. That is more than the GDP of most countries on Earth. Yet, every day, millions of us open our mailboxes to find shiny envelopes begging us to accept more money, more credit, and more rewards. Common intuition tells us that banks are businesses, and businesses need to make a profit. Therefore, if you borrow money, you should pay for it. But the reality is strange. The customers who use the product the most, the ones who swipe for everything, rack up airline miles, and enjoy free lounge access, often pay the bank $0 in interest. In fact, the bank pays them. Meanwhile, the people struggling the most are the ones funding the entire party. How can a business model exist where the best users get paid to use the product while the worst users are crushed by it? And why does this piece of plastic make us spend more than we intend to? The answer isn't just about interest rates. It is a mix of predatory math and behavioral psychology. Today, we are going to peel back the layers of the credit card industry to see how the trap is set and how to escape it. To understand the credit card, we first need to look at the fundamental principle, liquidity on demand. In a barter system or a cash economy, you can only buy what you can afford right now. The credit card system exists to bridge the gap between your desire and your paycheck. It is fundamentally a microloan issued in milliseconds. Lending money to strangers is incredibly risky. How does the bank ensure it gets paid back plus a profit without collateral, like a house or a car? The compound interest snowball. The bank solves the risk problem by charging an exorbitantly high price for the loan, the annual percentage rate, APR. Think of your debt like a snowball at the top of a hill. If you pay it off immediately, the grace period, the snowball melts, no harm done. But if you leave even a single dollar unpaid, gravity takes over. Let's zoom in on the math. The most dangerous number on your statement isn't the total balance, it is the minimum payment. This is the trap. The bank calculates the minimum payment to cover mostly interest and a tiny sliver of the principal, the actual money you spend. If you owe $5,000 with a 20% APR and only make the minimum payment, it won't take you a few months to pay it off. It will take you over 11 years, and you will pay nearly double the original cost in interest. The mechanism here is obvious but brutal. The system is designed to keep you in debt for as long as possible without you defaulting. They don't want you to pay it off, and they don't want you to go bankrupt. They want you in the Goldilocks zone of eternal payments. This is the engine of the credit card industry, harvesting the future labor of the consumer. But if you are smart and pay off your balance every month, the bank makes no interest. So, how do they still win? You might think, I'm smart. I pay my full balance every month. I'm beating the system. Not quite. Even if you never pay a cent of interest, the system has a secondary way to extract wealth, and it's hidden in plain sight. Every time you swipe that card, the merchant pays a fee of roughly 5% to 3% of the transaction to the bank. Here is the secret. To cover this cost, merchants raise prices on everything. This creates a hidden wealth transfer. Cash users are paying higher prices to subsidize the rewards points and cash back of credit card users. The poor who use cash, debit, are essentially buying plane tickets for the rich who use premium cards. But the true genius of the credit card isn't the fees, it's the anesthesia of spending. This is the plot twist of behavioral economics. When you pay with cash, you experience a psychological phenomenon called the pain of paying. Handing over a $100 bill activates the insula in your brain, the same area that lights up when you feel physical pain or disgust. It hurts to lose cash. Credit cards sever the connection between consumption and payment. You get the item now, but you pay later. The pain is delayed. You aren't handing over paper value, you are just swiping a plastic token. Studies using MRI scans show that when people use credit cards, they focus on the benefits of the product. When they use cash, they focus on the cost. The result? People spend anywhere from 12% to 18% more when using a card compared to cash. Even if you get 2% cash back, if the card made you spend 15% more than you planned, the bank has won. The rewards aren't a gift. They are the bait to override your brain's natural frugality. Let's put the pieces of this puzzle together. The credit card is not just a payment method. It is a highly sophisticated financial weapon. Layer 1. It uses compound interest and minimum payments to trap the vulnerable in a cycle of eternal debt. Layer 2. It uses interchange fees to tax the entire economy. And it exploits flaws in human psychology to anesthetize the pain of spending, making us buy more than we need. It is a system where the deadbeats, the industry term for people who pay in full, are subsidized by the revolvers, people who carry debt. It is a reverse Robin Hood scenario engineered by some of the smartest mathematicians and psychologists on the planet. However, this doesn't mean credit cards are evil. They are tools like a chainsaw. In the hands of a skilled operator, a chainsaw can build a house. In the hands of the careless, it causes a massacre. Understanding this system should fill you with a sense of caution, but also empowerment. When you swipe that card, realize you are entering a battlefield of willpower. The rewards, the convenience, the security, they are real benefits, but they come at a cost. The hidden truth is that the product being sold isn't the credit. The product is you, your lack of discipline, your impulse, and your future. Once you see the game for what it is, you stop being a pawn and start being a player. You can harvest the rewards without falling into the trap. Mastering your finances isn't just about math. It's about understanding your own psychology and the systems designed to exploit it. If you can control the pain of paying and ignore the siren song of the minimum payment, you are already ahead of 90% of the population. If you found value in decoding the hidden mechanisms of money today, and you want to arm yourself with more financial logic, hit that subscribe button. We are going to continue breaking down the complex systems that rule our lives, from the stock market to the psychology of advertising. Don't let the banks win. Click the bell icon to stay updated. Thanks for watching, and spend wisely